Good afternoon, everybody. My name is Tarmo Sild, and I am going to present you IuteCredit. It is funny to do this presentation while I don't see the participants. I am speaking to the computer screen. Despite of that, let me just make sure that this presentation is hopefully going to be interactive, which means that you are able to ask questions through your chat box, which I'm going to see on my screen. So it will be lovely to see your questions and also answer your questions while I continue talking. So without much further ado, let's talk about what is IuteCredit and what is the current bond offering. IuteCredit is a company which is 13 years old. We started the business in Moldova and we issued the first loan in Moldova back in 2008, August. I can remember it quite vividly because at the same time we saw how Russian tanks were invading Georgia from the TV screens. It was all over the place. So it was quite a memorable time to start a business in a country which is quite distant from Tallinn, and where the company has two co-founders who still continue running the business together with the rest of the management team, where Allar Niinepuu and me, we still had the two driving forces behind us. One was to make money, and the other was fear to lose money. And I think this is the connecting point that remains today, and that also is the connecting point between the shareholders of the company and the investors who have so far decided to purchase debt issued by IuteCredit, or who are going to decide to buy debt issued by IuteCredit. By debt, I mean the bonds. The current bonds that are right now on offer for your subscription with maturity of 5 years, with an interest rate with a coupon range between 9.5 to 11.5%, and with the covenants and collaterals package as usual, as already set in forth with a bond we have listed in 2019. Which has maturity of 4 years and will expire in 2023. So we started in 2007 in Moldova, issued first loan in 2008. After understanding that it works in Moldova, we entered Albania. Thereafter, we entered North Macedonia and Kosovo. Thereafter, we entered Bulgaria and Bosnia. So that's in a nutshell how we have developed the company. I still haven't answered the question what this company is about. Well, obviously, it is about providing financial services and making money with those financial services, but let me go into better detail. We issue loans to customers. Those loans are installment loans, which means that customers make us regular monthly repayments, which are pre-scheduled until end of full maturity of the loan. So we do not do what people also call payday loans. We don't do the loans which people are supposed to pay when the next salary day comes in full, or which are evergreened and rolled over constantly. That's not our business model. We do installment loans, which I think pretty much equals another concept nowadays used to describe the business, and the concept is buy now, pay later. Our typical loan product looks like a repayment schedule. There is a principal amount which we agreed to lend to the customer, and then there is a repayment schedule which goes over 12 months, 18 months, sometimes shorter, sometimes longer, repayment schedule during which the customer agrees to repay the principal together with a commission fee and accrued interest. The price of our loans is anywhere in the range from 0%, even in some cases for the end customer, to 70, high 70s. If you ask how it can be 0%, it's very easy. We also issue loans Klarna style. We actually started doing it sooner or earlier than Klarna. And from customer viewpoint, it looks like a loan which where the repayable amount equals the borrowed amount. And in that case, it's the merchant who pays us the fee for originating the loan and taking the credit risk. The core business of is still to issue the loans and collect more money back as repayments, to collect back more than the amount which we issue to the customer. That's the core. And as I said, the APR range is quite wide, but the weighted average APR of loans that we issue is somewhere in the low 50s. So in the big picture, it may look like a business where we put in the equity and borrow money from investors at, let's say, for the sake of discussion, let's say at 10%, and then we lend it out at, let's say, for the sake of discussion, 50%. And it may look even like overly lucrative, but there are, of course, nuances. The nuances are that the 50% we charge from the customer is nominal, annualized percentage rate. It doesn't mean that the customer pays us 50% on top of the principal. Actually, again, a very simplified example is of a customer who makes on average 500 euros monthly income net, and that customer buys a refrigerator, needs to buy a refrigerator, which costs about 500 euros. Our customers typically don't have accumulated 500 euros in savings, but they are in need of particular product, be it refrigerator, mobile phone, car tires, dentist bill, whatever. So they borrow the money from us, 500, and they make us monthly repayments of 50 euros for 12 months or 13 months. So the total repayable amount by the customers is 600 to 650 euros. In APR, it translates into somewhere around 50%. So that gives you the idea how we work. And with this 100 to 150 that we charge on top of the principal amount, we are able to serve the interest costs and the operating expenses and the credit risk costs, basically the cost of default, the currency exchange risks, and other cost elements. And whatever is left on top of it is the profit. That's really in the nutshell how it works. The product range is a bit broader. So the range starts from the loans that we issue in the shops by the merchants, but it moves over to the cash loans that we issue over our own branch network or over the national post offices, and also since 2021 also over our own ATM network. And we also make money with what we call wallet services, which are essentially some payment or payment related services. And today I can mention two in particular. One is disbursement of cash through our own ATM network, for which we charge a fee from the customer if they choose to take their money from the ATM and not to have the money on their bank account or take it from the post office, for instance. And the other type of fee we charge for issuing and use of MasterCard, which is pretty much standardized business. And I am not going to pay too much attention to it towards our company presentation. So start in 2007, first loan rollout 2008, expansion geographic started in 2015 and has been ongoing throughout all those years. And as of now, the company has more than 150,000 active customers. And by active, we mean somebody who has open loan balance and who is also performing, meaning that we get regular monthly repayments. This 150,000, the number that you see on slide 5 on the screen, represents the number of monthly repayments, pre-scheduled regular repayments that we receive. And those repayments also, by the way, pay for this presentation in an indirect sense, because in our company, it's the customers who pay the bill. With this customer pool, we have built a total balance sheet of more than 125 million euros, out of which 88 million is net loan portfolio. There is also a pile of cash, there is also a pile of technology, and there is also a buffer for future loan losses we call provisions. With this balance sheet of 125, we are able to make more than 60 million euros annual revenue, which is more than 5 million euros per month. This is the amount of money that customers pay to us for our services, either for the loan service or for the payment services that I briefly described. And from this 60 million euros, with today's numbers and today's dynamics, we are able to make at least 6.9 million euros net profit. The net profit number has been also our historical, so 6.9 is something is not something extraordinary. You can see our history and see that we have even exceeded this number. The company has 450 employees across the markets. Our today's markets list includes Albania, Moldova, North Macedonia, Bosnia, Bulgaria. We also have a asset in Kosovo, on which I would like to stop over a bit later. Everything starts with a vision and mission. For debt investors, maybe it is somewhat less relevant, because debt investors who care about fixed income, they care about whether your money is safe and whether you get the promised returns. But still, I think it's important to share in one basic sentence what keeps the wheels rolling, or what makes the customers to return to us, and what keeps us in the move. Our mission is to create extraordinary experience in the personal finance. And we do this with installment loans that are issued instantly in ideal case, and also flash payments. That's what we are concentrating on. And maybe one more peculiar feature is that we still keep people employed in the company to talk to the customers, to have the human interaction, to have the possibility that if you think even of your own personal experience, you can think of, let's say, home food delivery, which sometimes goes wrong, and then you have struggled, maybe I have at least struggled, who to call, who to find out, where is my order. Or maybe it can be the telecom company, or it can be the bank, where everything is so digitalized that you no longer have a counterpart to speak to, but you know that with a human counterpart, you could fix your question much faster as opposed to a bot. So that's why we keep still people in the company for human interaction with the customers. And that is also what makes customers happy. But I should say that we don't need all this team just to originate the loans. We could really do it in a very nice digitalized manner. We keep the team for the customer interaction and customer experience purpose. So that's what all this slide about our vision and mission is. Historical growth. We put to the same graph the number of customers. We actually count the number of customers who have turned to us for help, for assistance, and who in quite many cases we have been able to help. Maybe one benchmark number for your white notes is that we approve approximately 2 loan applications out of 3. It can vary country to country, it can vary product by product, but the broad ballpark number is 2 out of 3. Yet we count every customer who comes to us, we count every person who comes to us as a customer, and the total number of people who have approached us historically, as of now, exceeds 750,000 people. That's the number of people in our database whose performance data we have, and the data, historical data amount that we store about our customers, about our operations, is about 18 terabytes. And as I said, out of the 750,000, more than 150,150 are the ones who currently make regular scheduled repayments. The management team. This company is certainly not run by a single person, and this company is not even run by the 6 persons you see, but it's always good to have a first look of who is behind or who you know is responsible for certain functions. So inside IuteCredit, we have 6 general management functions throughout the group on the headquarter level and in the local country subsidiary level. We have the commercial management, which means essentially marketing and sales, which on the group level is run by my co-founder and partner, Allar Niinepu. The financial management, of course, which is run by Kristel Kurvits. Risk management, which doesn't mean only credit risk, but all kinds of risks, run by Tarvo Rahumägi. Our Chief of Technology is Mart Nael, and our Chief Customer Experience Officer is Göksu Tugay. So these are the key people who run this company on the headquarter level and who have on headquarter the team of about 50 people employed, plus subcontractors who we use. And then the remaining 400 work in the countries where we do business. Legal structure. Few keynotes only. Keynote number 1. Everything inside the group is owned only by the parent company, 100%. There are no mixed shareholdings. In every country where we operate, we have at least one subsidiary. Sometimes we have two. It can depend on local different legal regulations and requirements. There is always one company which owns all the loan portfolio. Inside the group, we also have IuteCredit Finance, which is our special purpose vehicle inside Luxembourg, which is issuing the bonds, which is the issuer for all bonds we have done so far and probably that we will do in the future. I already anticipate the question, why do you have a separate issuer? I have seen this question also in the Estonian webinar context. And the answer is that in order to issue bonds, we want to issue bonds which are listed in Frankfurt. Now, in order to list bonds in Frankfurt, you need to have an ISIN code which suits the two major European settlement platforms, Clearstream and even larger is Euroclear. And for that compatibility reason, plus there are also some legal and taxation considerations, it's the best for the group if we have a separate issuer in the Luxembourg, which can do the Frankfurt listed bonds, and it will be very complicated for the Estonian parent company to issue a bond with a Luxembourg ISIN, but bond with Estonian ISIN will not run on Euroclear. So it means it's not available to most of the investors who participate in the Frankfurt Stock Exchange. So that's the reasoning why we have a special purpose vehicle, IuteCredit Finance in Luxembourg, who is issuer of the bonds, who receives the monies for the bonds, and then transfer the monies over to the group treasury. The group controlling shareholder is Alarmo Capital, which is a joint venture, 50-50, between Tarmo Sild, Kristi Sild on one side and Allar Niinepuu on the other side. And the group, since it has had several equity financing rounds, financing round A was the founding. And since round A, there are two shareholders, as you see, who are now joined into Alarmo Capital. In financing round B, which we did back in 2018, September, where we raised the share capital to 10 million euros, there were new investors coming in and also the existing management team members and employees of the company. So the shareholder list get close to, I think, about 25 names. So from there, additional 10% shareholding money was coming in and shareholding was created for the new shareholders in round B. So that about the group structure. Everything owned by IuteCredit Europe. IuteCredit Finance is an SPV specifically to do things in Frankfurt, and controlling shareholder is Alarmo Capital, and there is also management team and round B investors inside the company. Of course, we have environmental, social impact. And we started with it not only because of marketing purposes. Initially, I remember when we financed the Chisinau Marathon, and we had 15,000 runners in IuteCredit t-shirts. It was, of course, a lifting moment for any company member. But it went beyond marketing. It really went into what we believe in, that we believe in sustainable, healthy lifestyle that we should promote for ourselves and also for our customers. We believe in socially responsible lending, which means that our Iute loan is not some kind of trap but IuteCredit loan is a solution. That refrigerator now is better solution than the refrigerator after accumulating or saving money for 10 months and then buying it. We believe that digitalization is a solution. We see how much paper we save already today in our countries by asking customers to use the Mylute app and do their whatever transactions they do using the app, and not to bring the papers or not to come over to the branch for over-the-counter transaction, which is time-consuming, CO2 consuming, if you think of the unnecessary trafficking, paper consuming, etc. We believe in all this. So somehow the environmental and social impact falls together with the business interests and is deeply integrated in IuteCredit. And of course, as regards the governance, I would like to make a statement that we are not focusing on non-discrimination or equality of gender or equality of all kind of whatever kind of characteristics you want to put out because of the need to look good. Actually, this company is very much about intellect and person's internal drive. Intellect and internal drive of every employee inside this company, starting from customer advisor or debt advisor and ending with chief officers. And when you concentrate on the drive and skill and the intellect, then clearly it's kind of side effect that you will have a team which is very diversified, gender diversified, language diversified, age diversified, etc. In headquarters, the last time I counted, we have people who speak at least 7 different languages. We have people from Albania, Moldova, Turkey, Russia, Estonia, of course, Finland, Latvia, and even some more. So we concentrate on environmental, social impact of our business, and we follow the principles of good corporate governance. IuteCredit strategy in a nutshell. Maybe it's also answer to the question, what will you do with my money if I buy the bonds? Well, the bond money we use to increase our loan portfolio or to repay our outstanding liabilities at short-term liabilities at peer-to-peer platform. That's the purpose of use of funds. Now, in general, why we do this issue is to grow the business. And to grow the business, we need to achieve different things in different fronts. First of all, we have to develop technologically. We have plans, we have projects in action for which we pay with our own profit. That for sure has also affected IuteCredit's profit margin, because all the free cash that we generate, a big part of it, we reinvest into technology development. That's how we do our own ATMs, which work cardless, using only Mylute app, so customer can withdraw cash from the ATM using the app. We spend money on the app itself. We are spending money on our new core, which is a set of business processes, technologies, and data management that actually enable us to go to the next level in instant lending and instant payment business. We continue expansion with entry into new markets, possibly with acquisitions. And we also continue expanding in the product range, so that we want all our customers in every country to be able to receive, pay, and borrow money over Mylute and ATM network by 2022. And we are also we are already in, but we have to go deeper into the e-commerce for integrated, seamless credit and payment experience whenever anybody has a shopping basket on some website and needs to go to the last step in getting the basket real. And the last step is checkout. And strategically, a few more numbers that we are aiming. We want to get 1 million active customers by end of 2023. That's one way to go, but I believe that with payment services, by developing the payment services, we will reach that number. We have another strategic target that the annual revenue of the group should exceed 15% of the balance sheet in total. In other words, when we build a balance sheet of assets, then the asset mix has to be such that it really is beneficial to the customers. Customers use those assets or the services that we provide with those assets, and they are willing to pay money for those services. And we want to have at least 15% of the balance sheet as our annual revenue. Currently, we are exceeding this target. I think we will exceed it also in future, but 15 is one benchmark number. And the other ratio is that the equity, the amount of money with which shareholders risk and which serves as a buffer for the fixed income or debt investors, that the amount of equity inside the group should always be not less than 15% from the total balance sheet. Again, currently we are exceeding it, but one has to bear in mind this number. We are also aiming annual OPEX not to exceed more than 30% of the revenues. And we are also expecting annual return on equity not less than 20%. Historically, we have overbeaten those targets. But again, one has to bear in mind that we are entering into more competitive, more regulated, more intense markets where the weak ones will die. Of course, I speak not in direct sense, but in literal sense. Having said that, this is all the nutshell I want to present as our strategy. About the technology and channels we use, we have a long list of own developed technologies which are maintained and run by our own team and also documented by our own team. I don't want to share too much of it outside, but I can assure you that we have our own loan engine core system which we developed from the scratch when we started the business in Moldova back in 2008, and which we have been developing ever since, which is based on splitting the full loan main sequence into small steps, which are then measurable and traceable and also rewardable from Tallinn, so that we have digital transparency. We have our own task management engine, which basically you can visualize as a traffic light system, which tells people who is supposed to do what. By people, I mean our team members. We have a customer management system, which unifies customer data across channels into a single customer profile. It's still a big work in progress. Everything I say here, it exists, but again, I cannot say that it's ready. We are constantly seeing that there is something more to be developed. We have the core system of data analytics and reporting. We are developing core banking system, which processes daily banking transactions. Let me make clear, we are not bank. We are not bank. We do not have banking license, but we aim to become a bank. And with this aim, one first has to start with providing the technology so that you are technologically capable of behaving like a bank. And thereafter, subject to regulatory overview and subject to meeting all kind of requirements, we might one day become a bank. But nevertheless, inside IuteCredit, we already run the technologies with a forward-looking vision that those technologies might be useful in the future. The whole business is running on Amazon, on cloud services. There are also backup solutions, which I'm not describing right now. Basically, the bottom line is that there is a lot of technology inside this group. We process more than 195 million transactions a month. Even a single repayment consists of different transactions, because if you take loan repayment into pieces, that is the repayment of principal amount. But if you have seen or you have received monies yourself, or you have done any bank business, you have seen that you also pay separately for different services like interest or maybe commission fee. There are also data transactions. Maybe, for instance, my status as IuteCredit customer today is slightly better as compared to yesterday, because I made yesterday my another loan repayment, and that's why my internal ranking somewhere inside IuteCredit is higher, etc. there are many data transactions going on. 18 terabytes of data. Systems reliability, of course, is key concern, key risk. We put a lot of effort into making it work as good as, I would say, Kalashnikov automat, simple and effective. So it's very important concern here. We put into technology development more than 5 million euros cash, and that's the cash that we earn ourselves. We have more than 50 people working on software and infrastructure. And since this year, when we launched Mylute App, by the way, this morning I got the news that we have more than 100,000 Mylute App users, which is great progress since the beginning of the year when we launched it. So more than 50% already of the business is signed by customers digitally. Moving over to our product offer. I told you in the beginning that we do installment loans, but actually those installment loans fit into 3 different categories, main categories. One is what we call dealer loans, which are the loans issued by merchants. Key feature, the settlement for the refrigerator takes place between IuteCredit and the merchant. IuteCredit doesn't give the customer any money. Customer takes the refrigerator or any other good. Iute pays the merchant, and customer signs the loan agreement and promises to repay for the refrigerator to Iute. Second type of loans is cash loans. There is no third party involved. It's straight transaction between Iute and the customer. And third type of loans can be like a dealer loan or like a cash loan, but there is additional feature. IuteCredit takes a pledge upon the asset. So on the presentation you see it's called car loan. We also sometimes call it pledge loan. And the key feature here is that at the end there is of course loan agreement and customer owes us money, but there is also collateral. The APR ranges are different here from product by product, country by country. And as I said, actually I should be precise that when here are min and max APRs on slide 14, then those APRs are the effective APRs for IuteCredit for our company. From customer viewpoint, the range can be even wider. From customer viewpoint, the APR can be even 0, and it is a true 0. They take 500 and they repay 500 in total, including everything. In that case, it's just the merchant who pays us the fee. About Mylute App. We use it as platform of current services, but also platform for future services. Customers can first identify themselves over this app. They can also authenticate themselves, and then they can authorize particular transactions, whatever business they want to do with Iute. So it's the underlying channel of our future business, and that's one of the channels which makes us digitalized, and that's also one of those channels which gives us competitive edge over the competition in our countries today. Our markets. We launched in Bulgaria, or relaunched in Bulgaria, only in June 2021, so I would not put too much attention to this country. I think it will have significance on the overall map starting from third quarter or fourth quarter, the latest. But as regards other countries, you see that we launched in Moldova. We went live in Moldova 2008. I mentioned you Georgia, Russia and Georgia. We went live in Albania 2015, North Macedonia 17, Bosnia-Herzegovina 19. Every country follows more or less the same growth curve, except of course that over time we have become more skilled and more ambitious. So we are not giving that much time for a country to develop into a money-making business. So as you also see, the business size is the country which issues the most of the loans currently is Albania, followed very closely with Moldova. Actually, those two go hand in hand in most of the comparisons. Then North Macedonia, which started 2 years later than Albania, is doing about half of the business in Albania. And Bosnia, which started actually 2 years after North Macedonia, they are in the growth path. Net loan portfolios, again, comparable country by country, 36 and 34 million in Moldova and Albania respectively, and North Macedonia about half of it, Bosnia in a startup phase. And the total income that we make country by country is also comparable for Moldova and Albania, and less for Macedonia, and then less for Bosnia and Herzegovina. If you look at the country populations, they are pretty much comparable, with the exception of Bulgaria. If you look at the GDP per capita, they are also very much comparable to each other, meaning equally poor. Our network we have built in these countries consists of 43 branches, more than 1,200 active shops or merchants. And I think that the picture that you see here today is not the same that you would see in 2022 or 2023. All those countries are actually aligning their regulations with EU. Some with direct political affiliation. Actually, Bulgaria is member of EU. Some because there is political direction towards acceding EU eventually, and some just because EU provides a good regulatory model, and actually the problems that the regulations try to solve are common everywhere. So the regulation is intense. To the ones who think that maybe those countries are somewhat lax, lenient, you can do whatever in Balkans because it's comparable to some, I don't know, African dictator country. No, they are very much comparable to what Estonia or Latvia or Lithuania are in terms of data protection, in terms of consumer protection, in terms of anti-money laundering and fight with terrorism, in terms of reporting regulations, capitalization regulations, etc. So everywhere we produce also a pile of reports to the local regulators, and everywhere our action depends on the approval of the regulators. For Moldova, there is made a point that license required no, but in Moldova actually still one has to register the company at the National Commission of Financial Market, and the registry, from my personal viewpoint, serves as a license, because without the registration you can't do the business, and the registration still is discretionary decision by the National Commission of Financial Market. In every country also, as a word of warning, I would say that we expect to be the upper limits set in force, the upper limits of interest rates that one can charge from the customers. In some countries, the APR, annualized percentage rates limits, are already in force. In North Macedonia, it's currently 47%. In Bulgaria, it's 41%. We expect that to be APR cap in Albania. There actually is APR cap indirectly in Moldova. In Moldova, the legislator has said that the total repayable amount by the customer, including all fees, fines, penalties, including everything, the total repayable amount cannot exceed the original principal amount. So there is regulations. It's not a jungle, and one has to comply. If we look at the market position where we operate, then as I said, we consider us to be present on two markets. One is the instant lending market, where we are pretty close to the banks, except that we act faster. We can issue the loans faster. Our loans can be somewhat shorter in maturity, even though the current weighted average maturity of IuteCredit loans, for instance, in August, was 22 months. And when we speak of the loan amounts, then banks tend to issue larger loans, larger installment loans or consumer loans, but to considerably smaller amount of people. And when we speak about wallet or payment services market, then we are aiming very intensely towards footless user experience. which you cannot say about the banks in our local markets, where we actually, I should put here photos of the bank branches where there are queues of people behind the door. So our business is about speed and comfort and access. And the direction is towards larger tickets and longer maturities in the lending business. A few words about the loan process. On slide 19, you see a simple scheme. It's really oversimplified. Actually, the sequence of how we originate loans is much more detailed. But you see that it's split into different steps, starting from loan application, where we know that somebody wants money. And then we start checking and verifying the facts. Mostly we try to do it in a digitalized way with first-time customers, especially with first-time customers. There are also sometimes manual operations involved. After checking the facts, we make the decision. And if a decision is made, the decision is notified to the customer. And if the customer is okay with the decision, then we will do sign and payout. We sign with the customer and we execute the loan payment to the customer. And that process part, from application to sign and payout, we measure in seconds. Ideally, we would like to do it in an instant. Because of real life constraints, it can still take considerably more than 1 second. But to issue a loan within 60 seconds is perfectly feasible and practiced inside our company. But as I said, manual operations can also take it down. And then the second part of the graph, as you see, is measured in months. And that's where the customers do their repayments. And eventually, if the repayment discipline is good, we really see our money coming back. We also continue with after sale to the customer to keep the cycle running. On the debt collection, not every loan main sequence has happy ending. Some of the main sequences have the ending where the customer fails to deliver according to their payment schedule. We have also separate processes for debt collection. We start actually very, very soon after we see that the customer is late with a scheduled repayment. Our overall timeline to save the loan or keep it performing is 50 days. I think that the industry standard is 90 days. I mean, you give more time to the customer to fix the issue, or maybe more time to keep the loan as performing, so as not to create the provisions and not to frustrate yourself that a loan has gone into default. In our case, it's 50 days, which means that we concentrate main effort towards bringing the loan back on track to a relatively short period. And if we can't do it within 50 days, then we terminate the loan agreement and the loan turns into defaulted loan. And we have also two important performance measurables, performance index that we use to measure both the repayment of performing loans and the repayment of already defaulted loans. I come to those ratios a few slides later. As to the loan portfolio overview, you see the pie on the left side of slide 22. The pie was 5 million back in 2015, 48 million in 2018, and 88 million by first half of 2021. And the pie represented here is the net loan portfolio. Gross loan portfolio is about 40% larger. You see that the pie has developed well. There is, as I said previously, equal positions between Moldova and Albania, whereas Albania is growing faster relatively. Macedonia is growing relatively fast. You also see some weight put behind Bosnia, and Bulgaria is not yet visible here. There are 177,000 performing loans. I told you before that there are more than 150,000 performing customers, so one customer can also have several loans. The average last 12 months APR of loans that we issued during last 12 months is 56%. Average loan maturity 18 months. That's very relatively dynamic number, and certainly the trend is towards longer maturities. As I said, the latest payouts exceed certainly 20, even 22 months weighted average. From the ratio of defaulted and total portfolio, I would like to point out only one number, which is the DPI. DPI is a ratio between actual repayments that we collect from customers after loan agreement termination and the principal debt at the moment of termination. In other words, when the loan goes into default, there is a certain amount of principal which is at risk of total loss, and we measure how much went into default, and we measure how much we collected in return. And historically, the defaulted loan collection is on slide 25. You see the ratio on the timeline from 1 to 24 months, and the ratio in percentage, how much we collected cash versus the amount of principal which defaulted. And you see that within first 6 months, we recover more than 40% of the defaulted principal. And within first 12 months from the moment of default, we recover more than 60% of the defaulted principal. The different colored lines on this graph represent the different default groups month on month. So you see here default group of July 19, August 19, and ending with the yellow groups from 2021. So they are all in here, and you see the individual collection ratios or individual DPIs of those groups. Now I jump back and I speak also about CPI. So DPI was debt performance index, and it is a ratio of how much money we collect versus the defaulted principal. CPI is another performance ratio. It's the ratio of how much money customers repay actually versus the promise that they give to us in the installment table, in the repayment schedule. So our ideal is to achieve a CPI of 90%. So 90% of the promised repayments are made on time or with maximum 30 days delay, 90%. You can ask why not 100%? Because as a bond investor, you certainly want 100%. You don't want 99 or something else. So how can it be that on the one hand, on the cash flow, on the one hand, you have the investors who want to have 100%, and on the other hand, the originator itself, the lending company, can also take 90%. How does it work out? Obviously, it works out with the APR that we charge from the customer, and also it works out with good debt collection results. But still, to answer the question, why not 100%? The answer is that if the repayment discipline was 100, so out of every 1 million euros which the customer promised to repay us according to repayment schedules, that they really truly repay 1 million euros on time. The problem is that in that case we have denied too many customers. I told you the approval rate is about 2 applications out of 3 get approved. So if CPI is 100 and the approval rate is 2 out of 3, then I would say that we have rejected too many good customers, and our OPEX, operating expense to pay out, is too high, because every loan application still is a cost for us. This company is very much about cash flows and measuring the cash flows and making money with money. So 90% represents the good idea for us as CPI. We are able to fix the remaining 10% also, as I showed you with the DPI drawing, but we focus on 90% CPI. And so far we have achieved to be pretty close to it. So the historical numbers IuteCredit has shown throughout this history are anywhere around 86 to 88%. For some countries or for some product groups, it can be also higher than 90%. That depends. But in the big picture, we are aiming close to 90. And then there is also another CPI, which is CPI with index 0 on the right bottom end of slide 24, which is basically the repayment discipline where you give 0 tolerance to delays. A repayment which is scheduled to be today has to be made today, and if we receive the repayment tomorrow, which is Tuesday, then it no longer counts. That's what CPI 0 shows, and it shows you that about 65% is being repaid exactly on time or even a few days before. You can also look at the shape of the CPI 0 graph. You see that the shape looks like, I don't know, a heartbeat of a patient in hospital. And I would actually say that it's a heartbeat of a healthy sportsman, because you see the graph is displayed on weeks. It's a week-on-week graph. And you see there are some tops and some bottoms. They appear rather regular. I tell you what the regularity is. Regularity is because our customers are the ones who have regular monthly income. There are 12 weeks or 12 events per year where they get money, and then there are the remaining weeks where they only are in the spending mode. And what we actually see here in this regularity is that the customers repay better when there are the salary days or close to salary days, and the worst moment is when salary days is approaching, but the previous one is long time behind. And what this graph also shows us, if you look at the weeks 10 to 21 from the year 2020, those memorable weeks when we first felt the impact of COVID, the economic impact or the cash flow impact, you see how CPI went down by about 15 percentage point. So we saw CPI falling to 50%. Only 50% of the loans were repaid exactly on time or before the time. And you see that we have also recovered from there. Customer statistics. I actually already said what is the approval rate. On the slide it says 57%. Whenever there is a contradiction between what I said and what is on the writing, please take what is in writing on the slide. So it's 57. Historically, I would remain still that it's about 2/3. And the acceptance rate 57 that you see here is also acceptance rate we have applied throughout last summer till this summer. So it has been more conservative. And the reasons, I think everybody can guess the reasons are that we were just suspicious whether customers take money because they are in structural trouble, they actually cannot repay it, or it's life as usual. So we have taken a slightly more conservative approach. But in the long run, I will still maintain that 2/3 is the correct number. Financial ratios. Usually, I should give over to Kristel Kurvits, who is actually sitting next to me. But Kristel is waving to me and telling that I am in good role, so I do it myself this time. And we are also running to the time limit. So there are some ratios which are worth following. There are 2 ratios that we promised to investors as part of this fund. One is the capitalization ratio, essentially how much equity we keep in the company in relation to the net loan portfolio. And the other is interest coverage ratio, essentially what should be the company's EBITDA versus the company's interest expenses. And we should make at least 1.5 times EBITDA as opposed to the money that we pay to the investors as interest. You also see that our net profit margin has been decreasing throughout 2019, 2020, and then also bouncing back starting from 2021. There are also some other interesting ratios like cost to income ratio, which is still below 40%, which is good. It shows that we are a fintech company, performing fintech company, which is making money. And also you see the leverage ratio of anywhere, but still less than 4.0. I am not going to go through the income statement or the balance sheet, and I think that we should rather now concentrate on your questions. Before that, I just say what this fund is about. This bond is €100 nominal. You can subscribe for the bond until September 24. So next Friday, after that, it's over. If you want to do it this week or next week, not later. After that, you can only buy it on the aftermarket, whatever the aftermarket is. The coupon that we promise you is 9.5%, paid semi-annually. It can be higher. The effective coupon will be clear on or around September 27, or maybe some days later when we will do the final allocation and settlement, everything according to terms of prospectus. The issue size, target size is 50 million. The bond is listed on Frankfurt Stock Exchange main list, and we did some intellectual, legal, technological gymnastics, and as a result of which and thanks to the permission of regulators, we got it also listed on Nasdaq Baltic. And that's also the reason why I am talking to you today. And now I really think that it's time, we have still some time left for your questions. Thank you, and I do apologize that I have already spent 55 minutes of your valuable time. Are there any questions? At the moment, I see there are no questions, so I take it that everything is clear. So I look forward, and we all, with our team, look forward to your subscriptions and happy making money with IuteCredit. Thank you very much. Goodbye.